Hi friends, welcome to Mona's Smart Money Stories.
Every Sunday, Maya has a quiet routine. She takes the 50 rupee coins gifted by her aunts and uncles and drops them straight into her clay pot. It feels good, a tradition of saving. But as the months pass, that pot fills up. It becomes heavy to lift. Worse, if someone accidentally drops it or it gets misplaced, those hard-earned savings are completely gone. There is also an economic limit to physical hoarding. Coins sitting in the dark remain stagnant. 10 coins today will still be exactly 10 coins a year from now. They cannot mathematically grow. That's when the pot starts to glow, and out pops Mona. She's a digital guide wrapped in glowing circuit patterns, here to intervene. Mona explains to Maya that if she wants her money to be truly secure and to multiply, it has to move. It must transition from a vulnerable physical jar to an official working home. Accumulating cash is a great first step, but physically securing and organizing it inside a dedicated system is the necessary second step to building wealth. Maya steps inside the local bank branch. The first person she sees is the security uncle guarding the doors. His presence establishes the institutional trust required for everything else inside to function. Mona points to the busy tellers and describes the branch as a massive money railway station. Individual funds systematically arrive from daily jobs and depart to pay upcoming bills, all on a strict set schedule. At the counter, Maya hands her heavy coins over to Lakshmi Akka, the cashier. Lakshmi takes the physical metal and hands back a neat thin booklet, a passbook. This diagram shows exactly how that exchange works. The bank takes physical cash and mathematically converts it into positive digital numbers in a chronological ledger. Mona translates this ledger into a money storybook. Every single line entry in that passbook represents a specific chapter or action in the money's timeline. A bank's primary job is converting vulnerable physical objects into indestructible, permanently tracked data. The tour moves to the desk of Mr. Rahman, the bank manager. Here, Mona explains that money doesn't just rest. It can perform actual work if placed in the correct type of account. Take a fixed deposit, or FD. You trade your immediate access to your funds for a specific period of time. In return, the bank guarantees a higher interest rate. Think of an FD as a timed treasure box. You set a specific date, and the extra profit is earned simply by leaving the box undisturbed until the timer hits 0. This graphic illustrates a recurring deposit, or RD. Instead of one large lump sum, you commit to adding smaller, equal amounts of money on a strict monthly schedule, building upwards toward a final goal. As you build this monthly savings staircase, the bank adds a layer of interest to every step. That mathematical compounding yields a final reward larger than the sum of its parts. Banking tools rely on time and discipline to actively multiply wealth, requiring zero extra physical labor from the saver. Maya and Mona pivot to Ananya Mom, the loan officer. This desk tackles a counterintuitive idea. A bank also pushes money out to its customers. A loan is not free money. It is borrowed capital that legally must be returned to the bank, alongside an extra cost known as interest. Mona describes a loan as a bridge. It's a temporary tool used exclusively to cross a financial gap, like university tuition or a new home, that a person cannot jump alone. This chart breaks down an EMI, or equated monthly installment. It's the strict mathematical mechanism that divides your total borrowed amount into equal sequential slices to be paid back over time. Think of the EMI as a monthly repayment train. Missing a scheduled payment derails the train and triggers severe financial consequences. Ultimately, a bank acts as a macroscopic balancing scale. It relies on the discipline of savers to safely fund the financial bridges of borrowers. Now that Maya understands the inside of the branch, she has one last question. How does she use her stored money out in the real world? Digital banking tools like UPI and debit cards function as invisible roads. They allow money to instantly travel from bank to store without physical coins. Navigating these roads safely requires OTPs and PINs. These act as your private digital signatures. They verify your identity for every transaction, ensuring only you can authorize the movement of your funds. Maya sits back in her living room. The decorated clay pot is empty on the shelf, while she holds a dense bank statement detailing her secure, growing funds. That piece of paper serves as a mirror of money habits. It reflects an objective mathematical truth about her financial behavior over time. Understanding the bank universe removes the fear of adult finance. The bank evolves from an intimidating building into a personal, lifelong co-pilot for achieving life goals.
To Mona's Smart Money Stories. Like and share our videos and subscribe to KiddoFin. Thanks for watching. See you next time.